So here's the hack for Tick Pulse. I've been working on this. It's a challenge. I've tested different things with the advanced decline line, monthly loss limits. We looked at discretionary techniques for this. But here is the result for Tick Pulse with the $1,000 stop loss, no profit target that we upgraded to, and it just really took a beating. Huge drawdowns. Um, Equity peak at the end of October, and then November it just fell out for an entire month. You have an entire month where this just falls out, and really ugly results. And the exact opposite did really well for about 30 days. And it's really hard to do anything with that other than to have a stop loss on your drawdown. It also got really choppy in here. So if you see from August, that's a big drawdown, and then a small equity peak, and then a big drawdown, and then a small equity peak. So you're getting equity peaks, but they're small compared to the drawdown. You don't want, you know, 10 steps backwards, 1 step forward, 10 steps backwards, 1 step forward, and then boom. And so we got hurt pretty bad with Tick Pulse. The market did something that it's never done before. It just acted uncharacteristically of anything I've ever observed for 20 years of trading. And so what is the hack for this? And I've looked at a lot of different things, and I found that the best thing is to use one of my favorite money management algorithms, average trade profit. And so take a look at this: 22,775, 57 average trade profit. This is with slippage in commission, 18,450 max drawdown. And I'm going to pull up the money management algorithm for this and show you the setup. So here's the basic setup. I'm going to show you a couple. So this is the money management algorithm. It did not include slippage and commission. I forgot to add that. I'm making this video, so keep that in mind. This is 119, but I'm going to go back and I'm going to show you the settings for this. So you format strategies and properties for all, and you see this, and we use the limit entry for the entry technique. The rules we use are 5 and 6. Average trade profit has been one of my favorite ones. We've talked about the degradation algorithm a lot, and the average trade profit has been one of my favorite ones. It's kind of a trend, keeps you in the trend. If it's doing well, if the average trade profit is between a certain number, then you trade it. If it's not, then you get out if it drops below a certain number. So, and then a small pinpoint entry, we wait for a $50 stop, $50 loss, $50 pullback, and so it's a very small pullback. It happens most of the time in Tick Pulse. And so we look at the parameters we're using for this, and the average trade profit, and this is over the last 10 trades. And so if the average trade profit is between minus 100 and 50,000, that's basically infinity. So as long as the average trade profit of the last 10 trades is greater than minus 100, then we take the trades and we get in on like $50. 1 point, we're getting in at 1 point better than the original strategy. And that allows us to refresh the strategy. As you know, this strategy, there is a platform limitation where you have to refresh the strategy. So when you see the signal, you have to refresh the strategy, and then you have to refresh the money management algorithm. So it's a pretty active management. You have to actively manage this and make sure that the signals are what they are. And so using the pinpoint entry loss helps us with that, because once we refresh it, it takes a little time. And so we get that a little bit of a delay. $50 is not much. And so those are the results. You see those here. I'm going to show you those again. I'm going to show you another setting where we keep this between minus 100 and 100. And so that's interesting too, because we don't want it at one extreme or another, because if it drops below minus 100, then it's doing terrible. We see that huge drawdown, $20,000 drawdown, and just losing almost in every trade. Just stop trading. This is one way to stop trading when it's in a horrible drawdown. And then if it's in a big move up, that can also be a short-term anomaly where it reverses. And so if we keep it between minus 100 and 100, that works well also. I'm going to go ahead and type that in here and then show you the results for that. It trades much less frequently. You see 309 trades, and those are the old stats, 36,812, about a $5,000 drawdown. And so I'm going to go over the other inputs that we're using down here. But keep in mind, you can use minus 100 and 50,000, or minus 100 and 100, and then pinpoint entry loss of 50. And then as you go down here, we're not worried about max daily entries, entry time. We're not worried about that. We're just taking the original signal off the original strategy. We're exiting at 1600. We use $1,000 stop loss, and we sync the exit with the master. and we're going to go take a look at the results for this. I'm going to pause the video and come back. So very selective now. We're down to 150 trades over the past 14 months, 29,500. Really low close rate drawdown, only $2,000, which I really like this. It's a little bit less stressful to trade, and you see, I like this equity curve. It wasn't between May and October, not much, but when volatility picks up, it's doing well. And so when we're between those minus 100 and 100 average trade profit in a normal, she's kind of in a normal zone. When it's taking normal trades in that normal zone, then we get in and we don't when it's at its extremes. When it's really doing bad or it's really doing good, we stop. And so here it is again. Here are the results. And so that is the update for Tick Pulse. If you want to trade Tick Pulse with the money management algorithms, we've taken some pretty steep losses on this, but this is one way to get in at another low risk entry point. Again, it has to be actively managed and refreshed because of the platform limitation on sub 1 minute charts with multi data series from different time zones and pretty generic settings, average trade profit and pinpoint entry, pretty generic. So we're not really doing anything that fancy. And like that equity curve, even though it's flat during this time period, you see periods of high volatility, it's more active, and this is what we're looking for. So that's the way to hack Tick Pulse and trade it better, and to give us a better chance at trading it in the future. We've been burned on this one with the massive market changes, and so going forward, if this is one approach you want to trade, I like this drawdown amount. And again, this is without slippage and commission, but that is a hefty average trade profit to day trade the E-mini S&P.